This is the part 2 of the cryptocurrency tutorials that we promised you on this channel. Now, we are already done with part 1. If you haven't watched the part 1, please go and watch, because this is the part 2. And if you are a trader that will want to go into cryptocurrency, whether to invest in it or to trade in it whatsoever, you need to stick around this channel and watch the step-by-step tutorials that we have for you. You need to know what kind of market you are going into. Is that okay? So without much ado, let's go into today's video and see what lessons we can learn. Now, today we want to continue from uses of crypto, or what are cryptocurrencies used for. But in case you want to get in touch with me, you can easily do that. This is how you can get in touch with me. Anyone who wants to talk to me, these are my details to get in touch. Okay, so uses of cryptocurrency. Point number 1 says that they are used, or they are new kind of digital money that you can keep as savings. Yes. So you can actually keep cryptocurrencies as a savings. You can save cryptocurrency just as you save the fiat currency. You know, when you want to open a fiat currency account, you need to go to the bank, and then you open an account with the bank, and then you begin to save. The same way, you can also have a cryptocurrency account or wallet. In the digital space, we call it wallet. So you can own a wallet and then begin to save. Okay, you begin to keep money there in your wallet. So yes, you can actually do that with cryptocurrencies. Point number 1. Point number 2 says that they are used to pay for goods and services. There are a few of you who have used crypto as a means of making payment online or buying something before. There are courses, there are a whole lot of things online that if you want to buy, you have to use crypto. They accept crypto as a means of what? Payment. So a few of us who have used crypto as a means of paying for a service or means of buying something is also something that crypto has helped us to achieve. So crypto are used for payment of what? Goods and services. Point number 3 says that they are used as financial assets that people trade or invest in. So just like other financial assets, we'll be going into that in a bit. Just like any other financial asset that you invest in for profit or returns, the same way you can invest in cryptocurrency for profit or returns. So we'll be looking at some of these financial assets and how crypto has become part of these financial assets. Now, the traditional financial industry is still divided on whether crypto should be considered as a financial asset. That is still a debate that is ongoing. Now, why are these debates coming up? The reason is because the popular argument is that they are impossible to value. It's like whether you like it or not, their value is always at where it is. And so people think that crypto should not be used or should not be added to the financial assets, because some assets can depreciate or appreciate, like a real estate. The building can depreciate or appreciate depending on its condition. But when it comes to the cryptocurrencies, they do not actually respect this depreciation and appreciation kind of thing. So because of that, some people are of the view that we should not add that to the financial asset class. But it is not only Bitcoin that is having that issue. We have other financial assets that have similar problems or similar features. For instance, gold. Gold is gold. 1,000 years gold is gold. In terms of value, it is still the same. It is something that is impossible to value. Gold is impossible to value. And that is why most of the various governments that are of the developed countries, they hold on to gold as a safe haven. In the US, for instance, Fed will tell you that the reason the US dollar is king is because of gold. The reason Russia is becoming powerful financially is because of gold. The reason China is trying to become or is becoming powerful is financially is because of gold. They are buying more gold. So it is impossible to value, just as Bitcoin. And so if the financial class of assets, they do not want to accept Bitcoin, then it's also possible they should not accept gold. But since gold has been accepted as a financial asset, then it is possible they should accept crypto as a financial asset, because it's not only gold that is also similar to Bitcoin. There are so many other commodities that are similar to Bitcoin or gold. So whether or not the argument will finally settle or not, whether we like it or not, let me put it that way. Bitcoin is a financial asset as it stands, because a lot of investors are actually holding on to it for bigger returns. Is that okay? So that is the reason this debate is going on as to whether Bitcoin should be accepted as a financial asset or not. But let's look at some of the financial assets. Okay. We have the stock market. And when we say the stock market, we are talking about ownership into a business. That is what we call shares. So there is a business, you want to own a part of that business. That is the stock market. Whenever you hear someone saying, me, I trade the stock market, or I'm into trading stocks, what it simply means is that the person is buying or claiming ownership into the business or a certain business. He's buying shares. So let's say Leading Forest is a company, and then we float shares that if you want to be part of the company, this is a contribution you should bring, or this is the amount you should bring on board in order to become a part of the company. And then whilst the company is growing financially, whatever profit the company is making, you will also be getting a part of that profit from the company. That is stocks. So when you hear stocks market or the stock market is all about buying of shares or owning part of the company. So ownership into a business or into a company is what we call the stock market. So the stock market is an asset. Okay, it's an asset class. All right. Now we also have what we call the fixed income. The fixed income is also an asset class. That is lending money to someone. And that is what mostly the banks do. The banks, that is what they do. You either lend them money or they lend you money. Is that okay? So that is what the banks, they do. They often have the fixed income, lending money to someone. Okay, you can equally lend money to your government. That is what they call treasure bill in Ghana. I don't know what that may be called in your country, but in Ghana, we have what we call the treasure bill or bonds or domestic bonds. So domestic bonds simply means that you are lending your money to the government or to a company or to an institution to use to work or to use to make more money or to develop. So whilst the company takes your money and is developing and is making more profit, they give you some of the profit because your money is part of their success. So the same way when you buy a bond or you buy fixed deposits or fixed income, or you lend your money to any company, the company will have to give you returns or profits in addition to your capital. So yes, we have the fixed income asset, which is also available. And a lot of people are into it. So if you want to go into the lending money kind of asset, then you have to consider what institutions allow that. We have various banks with different lending packages or fixed income packages. So you may only have to contact your bank and see what kind of fixed income package they have. And if you look around it or you study it and it is okay, then you can give your money to them and then expect the returns in any number of years or months they will give you. So that is another asset class, fixed income. Is that okay? Now, apart from the fixed income, we also have what we call the commodities. So ownership of goods, which has an end use. So ownership of goods, which has an end use. And this is where you can find gold. Gold has an end use. So when you owe gold or you have some gold, you know that definitely that gold will be used one day. There are lots of commodities that have an end use, if I'll put it. A lot of commodities have end use. So when you buy some commodities, for instance, let me use our local area here, for example. There are people who will want to buy some goods and keep with the hope that there is a season coming that those goods will be demanded for, or people will begin to look for those goods. Then he or she can sell it at a higher price to make profit. So when you buy any goods and keep, or you hoard any goods in the name of waiting for it to appreciate in value before you sell, you are actually into the commodity asset group. So you can also venture into this kind of business. It's all investment. All these asset groups are investment asset groups. So you can choose to go into the commodity asset group. That is ownership of goods, which has an end use. Maybe you can choose to buy bags of rice, maybe at a cost of $1 per bag, with the hope that by December 2024 or December 2025 or whatsoever year you might be watching this video, the $1 bag of rice will increase to maybe $1.50 or $2. So when you keep those goods, or when you keep those bags of rice, and then you wait for those number of years and then you sell it off for profit, you are actually into the commodity class of business. So that is also another class. And then we have the real estate class. The real estate class, that is also ownership of a physical space. So people have lands, people have buildings, people have a lot of properties, houses, mansions that they owe, and they use it for profit. They give it out to people to rent, or they sell it out to people. They rent their land space for other activities and a whole lot. So real estate has to do with ownership into a physical space, whether it is a plot of land, it is a building, it is an office, whatsoever that you owe, which has to do with a physical space that you have ownership of. Then you are into the real estate asset class. And then, pardon me, and then we also have the cash or the fiat currency assets. That is the ability to buy anything. When you hold cash, you have the ability, sorry, when you hold cash, you can actually use the cash to buy anything. Is that not it? Okay. Okay, let's continue. I have just taken some water and I'm okay now. So sorry about that. So the cash aspect has to do with the ability to buy anything. Okay, the ability to buy anything. When you are holding money, you can actually use that money to buy anything that you want to buy, provided the money can buy that thing. So people who hold the fiat currencies or the physical cash are also holding onto a certain class of asset. There are people who will even go and exchange these currencies and come and keep, with the hope that those currencies will appreciate in value, and then they will sell them off for profit, or they will go back to the bank and exchange them for profit. So if you are into that aspect of asset class, then this is where you fall. You are in that category of cash assets. So now, when you look at these assets, whether we like it or not, we belong to one of them. Yes, there are 5 of them. Ask yourself, which of them are you part of? The stock, the fixed income, the commodities, the real estate, or the cash? The cash aspect is also where the forex market is. So those of you who are into the forex market, you are under the cash asset. Is that okay? So the forex market is under the cash asset. You are buying and selling currencies with the fluctuations in their prices. So that is also under the cash asset. So which of these assets class do you belong to? And now there is a new one coming, which is the crypto asset, or there's a new one that has come, which is the crypto asset. So that is where the debate is, because the commodity asset is under the gold and other things. And then the cash asset is the Forex and other stuff, the physical currencies. But Bitcoin, whether we like it or not, has also become an asset because people hold Bitcoin for higher returns in the near future as investment, passive income. There are those who will want to do the day-to-day trading of cryptocurrencies. That is the speculative aspect. And it is just like Forex. That is also just like cash. So when you look at these asset class here, you will see traces or pieces of the behavior of Bitcoin in all of them. So it's so something. If I'm mentioning Bitcoin, I'm talking about the cryptocurrency market in general. Pardon me, when you hear me talking about Bitcoin, I'm actually referring to the cryptocurrency market, okay? So these are the asset groups, and crypto has become part of the asset groups or the asset class. So if you want to join this asset class, then you have to stick around and watch because these videos are going to come, and I am going to take my time to explain these things to you one by one, by one, by one, by two, by three, by four, in that order. So I think that if you are someone that will want to be an investor or will want to go into investments, you should begin to read more about these assets. These are the asset classes that we have: the stock market, the fixed income, the commodity, the real estate, the cash, and then now the crypto. So these are the asset classes. So you may have to choose which of them you want to invest into, or you want to invest to make profits, or you want to invest for passive income. Is it the stock? Is it the fixed income? Is it the commodity? Is it the real estate? Is it the cash or the crypto? Ask yourself and take a decision. But I think that you are interested in the crypto. That is why you are here. So let me take you through as we go along, okay? Take your time and watch these videos because I have enough time to take my time and to explain things for you the right way. Now, let's continue quickly. For the sake of time, let's continue quickly. Now, let's read some few notes. So apart from it being used as a means of payment, most cryptocurrencies are used to make speculative trades. So like I was telling you, it's just like the cash market or the forex market. So just like the forex trading market, it's used. People trade it by speculating which currency will rise or which cryptocurrency will rise or which cryptocurrency will fall. So I told you the last time that cryptocurrencies, it is their portfolios that rise and fall, just like gold. Gold, the portfolio rises and falls. But when it comes to its value is always where it is. You get it? Good. So people speculate cryptocurrencies just as they speculate other currencies. So someone may want to be a speculative trader by speculating the rise and fall of cryptocurrencies for profit. Then it is possible because it is part of this cryptocurrency asset. Okay. Or you may want to hold it. So some people hold it as investment and then they expect their value to rise. So when their value or their portfolios begin to rise, they turn up making what? More money. They turn out to make what? More money. So this one is more of passive. Yours is to just get an investment crypto wallet. There is difference between savings crypto wallet and then an investment crypto wallet. We'll be going there in the near future. So that's why I just want to take your time. But I'm just mentioning them. There is an investment crypto wallet and then there is a savings crypto wallet. So maybe if you want to be a passive income holder or you want to invest for a longer time, you may have to get an investment crypto wallet where you deposit the crypto and then automatically the crypto will begin to rise and fall. When the portfolio rises, you'll be making more profits. So that is under the investment aspect. So people actually hold on to this as an investment. Apart from those who are speculating for the rise and fall, there are those who are also holding it for a longer time for the sake of passive income. They just put the money there, they go to sleep. After a year or two, they come to check. After 6 months, they open their wallet to check the value of the crypto. So that is also there. Anyway, let's continue quickly because there are more things to talk about. So while the forex market is open 24 hours a day for 5 days a week, the crypto market is opened 24 hours a day and then 7 days a week. It never closes. So the crypto market doesn't close like the way the forex market closes. The forex market opens for 24 hours a day, but for 5 days. But the crypto market doesn't close. It opens 24 hours for 7 days. So it's just running every day, just running. Today, as we speak, is weekends, but the crypto market is still running as we speak. But the forex market is closed. So that is how the crypto market is. It has no off day. It has no holiday. It's something that runs every day for 24 hours. Now, crypto has helped investors to diversify their portfolios. Yes, like I was showing you the asset class. Now, crypto has given people a new option now. In the past, one will be thinking of going into the real estate asset class. Another person may be thinking of going into the commodity asset class. Others may be thinking of maybe, okay, going into the fiat currency or the cash asset class. There are those who might be thinking of going into the stock asset class or the lending asset class. So, but with the help of crypto, it has helped people to have a new option now, because it used to be just this 5. But now people have a new option that they can go for. So crypto has helped investors to diversify their portfolios. And more experienced crypto investors even generate passive income from different cryptocurrencies that they hold. Yes. So like I was telling you, they hold it for a while and then it begins to go up, they make profits. So they buy at low and then they cash out at high. Buy low, sell high. That is what they do. When the cryptocurrencies fall, they buy. And when they rise, they cash out with big profits. But oftentimes, we, those who are new to this crypto market, we always want to buy when we hear the noise at the higher part. They tell you, oh, crypto has gone this high. Crypto has gone so high. That is when you and I jumps in with the hope that we can catch the crypto profit whilst it continues to rise. And then we end up losing it because the time you hear about it is when it is gone already. But when it falls, people are not interested in it because it has fallen. So you are not interested. The investors will tell you that they are always looking for the lowest price. In anything you want to do, look for the lower price. Buy it at low price. And when the prices begin to go high, you begin to sell it out with huge profit margin. So cryptocurrencies, those who do the investment, they buy at low and then they cash it out when the prices increase. It's just like buying something down. Like I was using a bag of rice, for example. You buy it at low, $1, and then once it gets to $2, you cash it out. You sell it out, and then you make $2. Meanwhile, you bought it $1. So that is how the crypto market is. So people buy it at low, and then they sell it at high, or they cash it out at high. So those are those who are experienced, those who know about how the crypto market behaves, and then they take advantage of it for profits. But since you are here and you are watching this video, I can tell you for sure that you will also become an experienced crypto investor because I am going to show you everything on this channel. Now, the next point, since cryptocurrencies are financial assets that you can invest or trade, they are also referred to as digital assets or crypto assets or crypto asset, depending on the spelling. So any of them. So that is how the name is carved out. So the new assets class is the digital assets or the crypto assets. That is the new asset that has come. So this is it. Now, let's wrap it up quickly. Let's look at some few things here. I think it's very important I talk about this. Now, the whole cryptocurrencies, we need to look at how it all began. Okay, the whole crypto market. Let's look at how it all began. Now, the first cryptocurrency to be created is Bitcoin. And it was created by Satoshi Nakamoto. What? The name is sometimes very, very, very something, but I don't know if I'm even pronouncing it well. Satoshi Nakamoto. Satoshi Nakamoto. He is the one who created the blueprint of Bitcoin. He's the one who created what we call the white paper of Bitcoin. These are terms, but later you may understand them. The white paper, every cryptocurrency has a white paper. It has a blueprint, okay? But let me just leave it like that. So Satoshi Nakamoto was the first to come up with a Bitcoin idea or to develop Bitcoin as a cryptocurrency. And as it stands, it remains the biggest and mostly well-known. So it is the biggest as we speak, and the one that is well-known. If you are looking for a cryptocurrency that is well-known, it is Bitcoin. So the first cryptocurrency is Bitcoin, developed by Satoshi Nakamoto, and it remains the biggest cryptocurrency in the world. Now, we continue. There are also other well-known cryptocurrencies like the Ethereum, Cardano, Solana, Dogecoin, Polkadot, Litecoin, Cosmos, and many others. So it is not only Bitcoin, there are many others, okay? Some are similar to Bitcoin in terms of technology. Others are based on different technologies or have new features that make them totally different from Bitcoin. I think this is understandable. Fine. Today, there are now thousands of cryptocurrencies that have been created, with each trying to offer new or improved functionalities from the earlier cryptocurrencies or serve a totally different purpose or use. This also explains itself. So there are thousands of cryptocurrencies now, and each is trying to offer a new or improved functionality. It uses new currencies. These cryptocurrencies that are coming have different uses. That is the white paper. When you have the white paper will tell you what that cryptocurrency stands for and what it seeks to achieve. If a cryptocurrency will last, it will depend on the white paper. If it will not last, if it will fall, or if it will crash out of the market, it depends on what the owner or the white paper says. The white paper is everything. So if you want to invest into any cryptocurrency, some people take the pain to look at the white papers or what the white paper says. So when you hear of a new cryptocurrency that has just been launched, that has just come into existence, and people are making a whole lot of noise about it, that, hey, this is the future, let's buy, you need to ask, what is the white paper about this new crypto? What is its purpose? What is it actually here to achieve? Then analysis and conclusions can be made as to whether it can stand the test of time, so that you don't rush and put your money into something that will not hold. Do you get it? So yes, that is how it is. But we'll go further and we'll explain this white paper thing in detail as we move along in other episodes. Now, unfortunately, many are actually useless. Listen, that we have thousands of cryptocurrencies. This is where I want you to understand. There are thousands of cryptocurrencies, but unfortunately, many are actually useless, or even worse. Some are outright scams, but a lot of people still buy them because of their juicy advertisements. So a lot of people are buying those currencies or cryptocurrencies because of the juicy advertisement, the advert that is put out there. They bombard us with a lot of opportunities that we will get when we subscribe or we buy into that crypto that has just been launched. And then we rush into them. while some are worse. Some are just scams. But because of the juicy advertisements, we end up buying them, and the next day, your money is gone. Okay. People buy some of these dubious or fake coins and give away their money without understanding the underlying technology behind them. That is the white paper. They do not understand the underlying technology behind them. And at the end, the cryptocurrency ends up being worthless. Now, some people are jumping into the crypto market with the wrong mentality. Why am I saying wrong mentality? They believe that it is a sure bet. Once you buy it, you are going to make profit. It's a sure bet. And that the money they put in will just automatically grow. That is the sure bet. They think that once you buy or once you put your money into that cryptocurrency, your money will automatically grow. And with this mentality, it is not surprising why scam artists sees today's cryptocurrency market as a gold mine to make money from people. Because of this mentality that once you buy any cryptocurrency, you are going to have money. You are going to be rich because you have seen some advertisement on some social media and it looks so juicy. You think that this is the final piece that you've been looking for. Then you jump in. And because of that, these scam artists, those who create these fake cryptocurrencies or scam currencies, they know that you do not know much about this. And so anything they advertise, you will buy. So they create cryptocurrency platforms, they create fake cryptocurrencies, and then they ask you to buy, to invest in them. Then you buy. And then within the shortest possible time, you hear that that platform is no more in existence, or that cryptocurrency is no more available. And then your money is gone. The scam artists, they see today's cryptocurrency market as a gold mine where they can make money from a lot of people. And so I don't want you to be a victim. That is why I am taking my time to do series of videos that will explain the crypto market to you very well. So if you are here and you are watching these lessons, they are lessons that I want you to take them serious because you need to know this new asset class called the cryptocurrency asset class or the digital asset class. And if it is worth putting your money in there, you will look at the right way to do it. You wouldn't jump into it. You wouldn't rush into it because you've heard that crypto or one of the cryptocurrencies is going so high and it may even reach this level. You hear that, oh, this cryptocurrency, for instance, as we speak, we have some currencies that have skyrocketed and people are rushing, that they are now hearing about it. So they are rushing, going for it. They do not understand. They do not know that those cryptocurrencies have hit a peak and may begin to fall, because that is the point the big guys will begin to cash out their monies because they have made enough profit because they bought them when they were low. So they'll begin to cash out. And then once they begin to cash out, you will begin to see that currency or cryptocurrency falling, coming down gradually. Meanwhile, you bought at the highest point. So now that it begins to fall, you are losing money. It begins to fall, you are losing money. And then you see that your total money is bent out. And after a year or two, you hear that that crypto has gotten to its lowest. And then you are like, come on, to hell with this currency thing. I'm done. And that is the time that the big guys will start buying again. When you say it is over, that is when they will start buying again. And in a year or two, you will hear again that this crypto has gone back to this level and this time around even higher than the previous. And then you are like, what the hell? What is going on? My dear, stick around, okay? We have a lot to discuss in terms of this financial asset called the cryptocurrency asset or the digital asset or the crypto asset. We will discuss more. The part 3 will come very soon. Give me a comment. Let me know your mind about what you have learned in part 1 and part 2 so far. Is it something you think you want to look up to in the near future or otherwise? Let me know what you think by leaving a comment at the comment section. Thank you. My name is Kofi, your admin.